You need to understand on the back end how much money you need to personally make, what that looks like, and how does that correlate into things. If you need to make $5,000 and take that home, and you want to have a $10,000 a month business, well, you need 50% profitability. The thing that matters is you understand the dollars and cents and how that correlates into the size of your business.
I need to earn more money. Well, why do you need to earn more? Where's your current money going? And most people can't answer that. They just think that they need more, but that creates the trap of, well, I made more, so I'm going to spend more. I made more, I'm going to spend more. And a P&L is a really great tool to avoid that and to help you understand, again, where is your money going?
Welcome back to Beyond the Pump, where today we're going to actually talk about understanding your P&L. Here's the crazy thing. Most of you don't even understand what the P&L is. And it's like, oh, P&L, profit and loss, I get these reports, whatever. You need to understand how to read it. Chances are, if you're doing like 5K, 10K a month, you should probably be figuring it out on your own. You don't need to spend money on a bookkeeper. And you need to understand how that correlates into your financial reporting from a personal perspective. It's super easy to go out and just spend money, but how do we know if the business is healthy or where the potential risks might be? Before we jump in, I'm just going to tell you there is no perfect P&L. I'm going to give you some ranges, some numbers, and all these things, and some thoughts that I would say, but every single business is absolutely different. So you just need to understand what you're managing, what you're focusing on, and what that's going to look like. And today, this is going to help you out.
I would assume that the majority of what we're going to talk about around how things should look are grounded in the service-based industry, where people are having to go out and deliver and fulfill on a promise versus like maybe a product or, a different kind of ancillary type of business, because those numbers will look different. And the point and scale too, like obviously multi-million dollar, $100 million, $1 billion company are going to look different. So those numbers tend to shrink and move around a lot. But yeah, for you coaches, this is definitely going to be super pertinent, and this will make or break your business, by the way. So you definitely want to make sure you're paying attention. So as you're adding things, you're doing it in a way that's responsible for your financial health, and you can keep your doors open and grow your business across the next couple decades, which is, I think, really the long-term goal for most people in the coaching industry. What is a P&L?
P&L, it is a profit and loss. So a P&L just outlines your overarching accounts. So accounts within, I'll talk kind of QuickBooks terminology, not accounts like your literal bank account, but rather a chart of accounts, which would be marketing expense, payroll expense, credit card processing fee expense, where your revenue is coming in from. Those accounts are basically put down on a form. The very top one is going to be revenue, hint, hint, and then all of your expenses are going to go underneath it. And the very bottom line is going to effectively tell you how profitable your business was. You can be as complex or as simplified as you want when it comes to those quote unquote accounts. But at the end of the day, it should be a single summarized report over the period of time you're looking at, typically monthly, quarterly, or yearly, and just tell you what is the profit and or loss of your business during those times. If it's a single one, obviously it's going to be profit or loss. So that's what that is going to give you. Just overarching snapshot of the success of your business.
And just to be clear, we're saying 3 letters. We're not saying penal. We're not saying that. Like not penile, P-N-L, 3 letters.
So up top is your revenue. Here's all the money that comes into your business. And you might break that down if you're a simple business into literally one single line, or you might have an overarching line with like 3 sublines, 4 sublines of like, I sell a digital program, I sell this type of coaching, and I get affiliate revenue through this product, or whatever the things might be. You might break those up if you want some clarity there, if there's a certain reason to. But overarching, the very top of this is going to be, here's all the money that came into that business during the period of time that you're looking at. And that's literally the top part of a P&L. You got to start with how much money you made. The next thing you'll typically see on a P&L is going to be COGS, which is cost of goods sold. Your business may or may not have this. If it doesn't have COGS and everything in there, it's fine. It doesn't matter. Like, this is probably for somebody who's starting to get a little bit more growth and scale out of it. COGS are literally a cost. It's typically a variable cost. It's something that you only experience during certain situations. So a fixed cost is you just have it all the time. You pay your Zoom bill every month. That is a fixed cost. You pay that every time. If I hire a teammate, my fixed cost for Zoom then go up, right? It goes up from there. So a variable cost, one that I always had in my gyms was bottles of water. The more clients that I had, the more waters that got consumed. So that expense would go up when I had more clients or go down when I had less clients. It was reliant upon my client load. So COGS are typically going to be more variable cost in nature. Things that you could see in COGS line might be payment processing fees, or let's say you do third-party financing or pay over time type fees. Those might be delineated as a COG. You might have a setter or a salesperson that gets a percentage of the revenue that they generate. That might be put in as a COG. If you have to pay for access to a platform for coaching or something for your clients when they're actively using it, and that number goes up and down, that might go in as a COG. If you sell supplements or things like that, you have to buy the supplement at your wholesale cost and then sell it to somebody. That would be a COG. So a cost of goods sold would go into that side of things. And that's effectively the first, so to speak, area on your P&L, which is going to be revenue minus your COGS, is going to give you out of the gates a gross profit. That's kind of the first thing that you typically, the main line there, that you're typically going to see within the P&L. Again, everybody's P&L is going to be a little bit different, but that's going to be the structure. Below those COGS, that is all the other expenses of your business in no particular order. So you're going to have marketing, you're going to have software fees, you're going to have whatever it is. We all know you're out there taking pictures of your shopping cart so you can do what you need to do for whatever you might want to do with it and everything like that. This is not financial advice, by the way.
This is totally financial advice.
You know, you if you're traveling to conferences for work and things like that, your travel stuff is going to be an airplane. If you drive and you're a mobile trainer and you're using your vehicle and gas and things like that, insurance, like health insurance for your team, all of those lines are going to be down below, and those are going to be all of your expenses unrelated to selling stuff. You'll then have a total expense line at the bottom to add all of that stuff up. So you then take what is your gross profit minus your expenses, and you now get your net profit or your net operating income. If you have debt and things like that, you would see all of that stuff down below, debt payoffs, and you might start to see, for example, interest and interest paybacks and just things like that that are down below that line. And then you would have a final subline of EBITDA or earnings before interest, taxes, depreciation, and amortization. But if we're running a cash business, we're doing 50, 60, 100K a year, you're probably not getting that complex. But that, like, super, super loosely is going to be the structure of this one sheet P&L, so to speak.
Yeah. And again, numbers tell a story the same way that if someone has a certain amount of shoulder flexion, or shoulder extension, that might be able to give us an indication that there's a limitation somewhere. Your P&L is the same way. Any number that you put together is going to tell you a story. And the entire idea around, having regular visibility and checking in and having some good habits from the beginning of managing your profit and loss statement is very similar to having way too many subscriptions for various services, whether it's AI platforms, whether you have 14 of those and you forget a couple, maybe, but like a lot of people have a lot of subscriptions that they have no idea about. And so this is why people get surprised and then they're reactive and then they see the next charge come out. And, you have your coaching platform, you have your CRM platform, you have, some kind of education ecosystem. I mean, easily that's going to be potentially north of $100, $200, $300 just in those things by themselves. And you might be having some subscriptions you don't even know about. So as you're early in your coaching career, it's really important for you to maintain that financial discipline of going in there every month, checking your expense line, like looking at what your money is going towards. Otherwise, this is where you start to really get in the mud of, I need to earn more money. Well, why do you need to earn more? Where's your current money going? And most people can't answer that. They just think that they need more, but that creates the kind of trap of, well, I made more, so I'm going to spend more. I made more, I'm going to spend more. And a P&L is a really great tool to avoid that and to help you understand, again, where is your money going?
In terms of percentages and healthy kind of buckets for your business, again, There is no perfection. There's seasons of business, and you frankly have the liberty to run your business however you want to. I think
Legally,
the one that I
within
would
legal
say is
bounds.
kind of like stuck, like you need to be targeting something here, is your profitability. You need to understand on the back end how much money you need to personally make, what that looks like, and how does that correlate into things.
Mhm.
If you need to make $5,000 and take that home, and you want to have a $10,000 a month business, well, you need 50% profitability. If you need to make $5,000 and you want to have a $20,000 a month business, you need 25% profitability. The thing that matters is you understand the dollars and cents and how that correlates into the size of your business. For a
Mhm.
rough scale, I would say you need to be targeting somewhere on the low end if you're a smaller business, 30%. If it's you and one other person, there's no reason you can't be making profits that are more like 70, 80, 90%. But let's assume we're starting to build some infrastructure and everything there. The very low end, I would say targeting is how do we get to at least 30% profitability off of everything that's going on. Now, if it's just you, some infrastructure, and nothing, I would look at your 30% and be like, whoa, why is that so low?
Mhm.
So context very much does matter here. But if we're talking a growth and scaled business, 30% profitability is going to be that kind of target out of the gates. 25,
Mhm.
35, might be 40, might be 20. Again, there's some range, but let's say 30.
Yeah.
That means that 70% is left to spend on every single thing else. For every $10,000 you make, 7,000 can go towards all of your expenses to run your business. Usually the next biggest expense item is going to be, especially in this virtual world, payroll, your people. That is likely going to be the next most expensive thing. That should probably be somewhere in the range. I'm going to say 35 to 40% would be healthy. Now, maybe you're very heavily reliant on people. There's not much other things going on. Maybe you're paying upwards of 50%, some version thereof. Maybe you don't participate in your business at all. You do absolutely nothing and people run your entire business. That's going to cost you more. Maybe it does push 55, 60% of your total and everything. So again, situation kind of matters here, but I would say out of the gates, you're working in your business and you have a team. You're probably looking somewhere in the 40% range, 35, 45, somewhere in there. That's going to be a realistic, like, hey, here's what makes sense. And here's how
Mhm.
I can go and kind of grow and scale things on the other side.
Yeah.
Now,
Yeah.
30% for you, 35, 40%. So let's say you got 30% left. 30 plus 40 is going to be 70. You got 30% left to spend on your business. That is where we're going to start to delineate into marketing and all of the other operational needs that your business has. Marketing is likely going to be the next biggest expense in your business. If it's scaling and going well and you're getting really good return on your ad spend, then hey, you might be pushing 20 to 30% on that side of things. But
Mhm.
it should be an investment giving you money back. If
Yeah.
you're just basically doing some stuff, you're boosting a few posts, you're doing a couple of $3 a day type things, we're probably talking as low as like 5%. I'm going to tell you now, if you have zero marketing spend in your business, you don't have a real business. Just saying it. And coming from somebody who doesn't traditionally advertise on the internet, your marketing spend could also be travel and spending time with people and all those things that you're attributing there to help grow your network and do more of the
Mhm.
referral based marketing. But you should have some marketing efforts baked in. And then the last thing is you're probably spending somewhere between 5 to 20%, let's just call it 10 to 15% on infrastructure, softwares, and the actual things that help your business run on a day-to-day basis. So
Mhm.
G Suite, calendar, whatever, project management tool, Notion, 14 AI subscriptions, as Andrew so eloquently put out there. But those are the things that should help make you more efficient on that side.
Yeah. And I think, and that's obviously a lot of numbers, especially if you're not number oriented. There's all this stuff is really integrative. And we have had a couple different podcast episodes in the past where we talked about the cost to acquire, the cost to fulfill, like there's a lot of different items like that we would encourage that you go back and start to understand. This is more or less like the report card on some of those things. Obviously, you could talk about these topics for multiple episodes and still never really get to the bottom. So we will be going through a financial series. So if you haven't already subscribed, make sure you do, and make sure you turn that alarm on so that way you can see whenever these new episodes drop. Because while we do like to talk about coaching material, fitness, nutrition, stuff like that, we understand that most coaches that are probably listening to this podcast have no idea on how to manage their financial growth and health of their organization, which will kill you faster inside of business more than just about anything else is just mismanaging your money once you start to earn a little bit. So that's your biggest asset, is leveraging your financials to help you grow in a way that's responsible. If your labor line's getting north of 40-50%, and you're making, for quick numbers, $100K a year, and you're spending $50K on another person, that's not great. Yeah, I think that's probably a pretty good shotgun blast of a P&L navigating that. As I said, we'll dive into some more particulars across the next couple episodes in the future. So make sure you subscribe and leave us a review if you really found this valuable. And if you didn't, leave us a review anyway. And, yeah, that's all I have to say about that. Steve, anything from you as we wrap up?
Understanding your numbers is like understanding your macros. Take them both seriously, and you can make the changes that you want to make. One's with your body, one's with your business. So dive in. We appreciate you guys listening to Beyond the Pump today, where we break down the business of fitness and nutrition. Hopefully this was helpful. A lot coming at you really quick, but I promise you, if you spend some time on this, it's going to help you out. Until next time, crew. Peace.